Hello guys, welcome back to my channel. Thank you so much for watching the content that we produce on a weekly basis, and thank you also for sending through the questions regarding all things credit. I hope I'll be able to address all of your questions and your concerns throughout this series. If you're new to this channel, welcome to Money Sense with Miss T, a financial wellness hub empowering and equipping you to make sense of your money. My name is Tendo and I am a financial coach. And guys, please note, I am not a financial advisor, and none of what I say and none of anything that I have produced content-wise constitute as financial advice. So please keep that in mind. So today's topic, we are going to answer the question, is your credit score really that important? And the reason we are delving into this topic is I know that in my previous video I mentioned how one day some of us are going to have to make the decision to purchase those big ticket items like buying a house. And when you want to buy a house, most of us can't afford to buy a house using cash. So you are going to have to apply for some form of credit line. And when this happens, you want to make sure that you position yourself in a way that you are attractive to the lender. Why is this important? You want to be attractive to the lender because you probably don't want to basically pay increased costs of debt. So you want your interest rates to be lowered. You want 100% financing, and you probably want the highest credit limits. So what matters to the lender? The lender wants to know, have you borrowed before? And if they were to extend this line of credit, would you be able to pay on time every time? So what do you need to know when that time comes for you to make that credit application? So I want you to, have a balanced perspective when you basically enter into these, or when you enter into this debt space, right? So understand that the lender is going to make use of a lot of factors as well as a lot of considerations when it comes to assessing your credit risk and assessing whether or not they should basically lend money to you or not. So they would look at the state of the economy, for instance. They would look at the risk that is associated with the line of credit that you are applying for, as well as basically whether or not the line of credit is secured or unsecured debt. But over and above that, they typically look at the 4 documents that I'm going to mention and basically do a deep dive into. So they would basically typically look at, for instance, your bank statements. They would look at your credit score and your credit report, your statement of income and expenses, as well as your statement of assets and liabilities. Okay, so the first area that the lender is probably going to look at when you do make that credit application is your credit score as well as your credit report. So what is a credit score? A credit score is basically a 3-digit number that is generated from what we call a credit report. And a credit report, the simplest way I can explain this, is basically a financial snapshot that basically tells the lender about how you go about managing debt or how you have managed debt in the past. The higher this number, the better for you, because this communicates to the lender that your credit risk profile is low. And when your credit risk profile is low, that probably means that they are going to extend credit to you, and it also probably means that they are going to charge you less for extending that type of debt. So there are things, or there are factors that basically go into the credit report that informs how this credit score is determined. And I'm going to just go through about 5 of them. And the first one is, in the credit report, it will list all your debts. And this is probably a great place for you to do a completeness and an accuracy test to see whether or not you recognize the debt that is listed on that credit report. Because believe it or not, there are people that may just be impersonating you and basically taking out lines of credit on your behalf without you knowing. So identity theft is a very big thing. The second thing that will be reflected on that credit report that affects this credit score is your credit payment history. And guys, this is where a lot of people have have really messed up their opportunity to basically get credit because they opened accounts when they were still students and they never got around honoring them in full. So credit payment history basically talks about how you've gone about paying your debt, right? So it will highlight basically any late payments. It will also highlight any missed payments. So the other thing that goes into the credit report is basically the credit mix. So secured as well as unsecured debt. Your judgments will also appear on your credit report. And these are just some of the things that make up this credit score that we so easily obsess over. Okay, so what do I need to action, or what is my role in this entire process? I want to basically set you up in this way. So go online and register with any of the credit bureaus or credit referencing companies where you live. So the likes of your TransUnions and your Experience, and basically pull out your credit report for free. You are entitled one free credit report from any of the credit bureaus and NM, right? So once you've pulled out that report, I want you to look out for those 4 things or those 5 things that I mentioned previously. So the first thing is when you pull that report, right? If there is any activity that the credit bureau is basically monitoring and basically tracking on a monthly basis on your behalf, you are good, guys. There is no need for you to go and basically apply for more credit so that you can increase this credit score to the highest it can ever be. Remember, quality over quantity. But if you get this credit report and you find that there is nothing, there is no activity, there is no credit activity that is being monitored and that is being tracked by the credit bureaus, this probably means that when you apply for credit, because there is no way for the lender to know basically how you go about managing debt, they are probably going to decline your application. So I want you to then think about doing the following things. So how do you get the credit bureaus to basically start tracking and monitoring your debt behavior or your debt management capabilities? Is by taking out debt, right? Okay, so how do you go about basically ensuring that there is some form of activity that is being tracked and that is being monitored by the credit bureaus? And guys, I want you to be very careful here. When you do decide to go for lines of credit, just be very careful, because really it can end in tears. I shared in my previous video how I just went to town with my clothing account with a simple attempt to basically just get my credit score and my credit report going. So please be very careful. I know a lot of people will suggest that you open basically a credit card and have a limit of 1,000 Rand, probably use that 1,000 Rand for things like groceries or petrol and pay it off in full every month until you get to a place where you're ready to apply for credit. But know yourself. Self-awareness becomes very important in this space. Know yourself. This could be a danger to yourself and your financial future. So be very mindful of what you are doing when you get into the debt space. So is having lines of credit the only way that you can actually start building your credit score or have activity in your credit report? The answer is no. The credit bureaus also track your phone contracts as well as insurance. So those are the other things that can appear on your credit report that can help you basically in your application for lines of credit. So very important to note when it comes to credit scores and credit reports. Remember, the lender does not only use your credit score as a means to determine whether or not to extend credit to you. There are other matrices that they use depending on what their policies are in determining whether or not to extend credit to you. Granted, the credit score is probably the first place they are going to go to when they want to determine whether or not they should extend credit to you. So that's why it's important for you then to have a credit score. So let's just keep a balanced perspective about credit scores and credit report and not overly obsess about this number, because this is not the only thing that the banks will consider. The credit score or the credit report is probably, think about it probably as a means to start negotiations, or basically your starting point or your entry point when you basically start having conversations about them financing whatever it is that you want to purchase. So the second thing that the lender will look at or typically ask you for when you do apply for lines of credit is your bank statement, because your bank statement will basically tell a story about your income as well as your expenses. So if we look at the income, the lender is basically trying to answer the question, is this person reliable? Does this person receive a reliable income on a recurring basis, right? So are they stable? So if you are employed, for instance, and you have a profession, you basically, this basically indicates to the lender that you probably are stable, you probably are going to get a consistent income on a monthly basis. So that basically reflects well on you. If again you get additional streams of income outside of, let's say, the salary that you get on a monthly basis, that also reflects well on you. Now, if we go to the expense side, right, the lender wants to also assess, does this person basically meet their obligations on time every month? So things like how you go about paying for your monthly rent, your electricity bill, your water bill, your insurance accounts. So that also indicates to the lender whether or not you are able to make those obligations on time every time. So remember, guys, your bank statement tells a story, right? And you want the story to be compelling. You want the story to be a positive story when you sell it to the lender, right? So the lender would look out for things like, do you pay your monthly obligations on time every time? They will look at, do you have any savings and investment plans that go off on your account on a monthly basis? They will look at things like, when do you spend your money? Do you spend most of your money on weekends, for instance? Do you spend most of your money at wee hours of the night? Where do you spend your money? As well as, how long does your money last you? So from the time at which you receive your income, how long does it take for you to use that money until it runs out and you probably have to depend on lines of credit? So living paycheck to paycheck. Those are very important factors that the lender will look at when they are basically making your assessment as to whether to give you money or not to give you money. So the third thing that they will request from you is your statement of expenses and income. And this, ladies and gentlemen, is also known as a budget. Guys, I don't think I'll ever stop singing the importance of having a budget and having it written down. But anyway, the lender will probably ask you for this, because a budget basically, like if you remember from the template that I shared with you a few weeks ago, the budget helps you basically categorize your needs, so your living expenses, your savings and your investments, what your debt landscape looks like, in a structured format. So when the credit assessor basically works on your case or on your application, there are different ratios that they look at. And the one that I want to talk about is the debt to income ratio. This is a ratio that basically tells the lender with how much of your income basically services debt currently. Before we extend credit to you, what does that picture look like now? And how do we go about calculating this debt to income ratio? We basically take the minimum payment that you would, assuming you pay minimum payments, the minimum payments that you would pay on a monthly basis, and you divide it by your net income that you receive on a monthly basis. And that percentage basically is what they would consider. If it's too high, they are not even going to go forward. They're probably not even going to go forward with the application, because really, if they add to, an already high risk, an already high debt to income ratio, it's just going to paralyze you as a person. So guys, if you have a lot of debt, I plead with you, please fix it now. I released a video, I think last week, where I was basically giving you tools and equipping you with the right strategies to basically start the process of getting out of debt as soon as possible. You don't want things like this to basically stand in the way of you getting those big ticket items. So sort out your debt landscape as soon as possible. So the fourth thing is the statement of assets and liabilities. And I think with this one, I will actually do a video where I basically teach you how to go about defining what your assets are and what your liabilities are, because it's very important for all of us, guys, for all of us to know what our net worth is. This thing of net worth is not just for the top 1% in the world, it is for everyone. And I think, as soon as you find out what your net worth is, it can either stress you or it can either encourage you. But I think as soon as you get a hold of what that net worth looks like, it can encourage you to basically move in the right direction or in a positive direction. So the lender will basically use your assets and liabilities, and again, they will perform a few ratios to make a decision as to whether or not they should extend debt to you. So having things like savings and investments, right, in the form of cash as well as security, can work to your advantage. But if you have liabilities on the other hand, like a lot of debt, and again, depending on what type of debt is, because not all debt is created the same, this can work to your disadvantage. So just make sure that you get a hold of your assets as well as your debt landscape under lockdown when you do apply for credit. Lastly, let us really take care of our debt, guys, because also just outside of us being able to buy those big ticket items and getting approved for, lines of credit from lenders, your credit score or your credit landscape basically has a bearing on your ability to get employment. And for most of us, the reality is we want to get employment, right? So employers, before they employ you, they run credit check. Most employers run credit checks before they even hire you, because it is known that over indebtedness is cited as one of those things that lowers productivity, and unfortunately you are also seen as someone who is susceptible to fraud and theft if you are overly indebted. Whether or not that's true is neither here nor there, but the point is you want to be in a position where you've sorted out this part so that you don't even get to a place where you're not able to get hired because you are so overly indebted. So I hope this video has helped you to sort of have a balanced perspective on how the world of credit or the world of debt looks like when you do want to apply for credit, so that so basically I want you to leave this video understanding that yes, credit scores and credit reports are important, but they are not the only thing that the lenders will consider when they are making that decision to either borrow you money or not to borrow you money. Now, if this is your kind of content, please comment, subscribe, and yeah, let us know what you think about this content and what questions you would like for us to answer concerning debt. See you next time. Thank you. All right, my favorite part of the video, a call to action. So I'm going to challenge you to do two things. So register on those credit bureaus websites. So your TransUnions, your Experience, your XDS, the list is endless. I think I'll just mention them on the description box on this video. Yeah, I think that's what it's called. So register there. And number two, pull out that free credit report and start basically understanding what is sitting in there and understanding basically how you can go about improving your credit score, for instance, if your credit score is a bit questionable.